Good morning. Welcome to Admiral Markets webinar. Today's focus is live trading here in this Forex commodities and stock indices markets. Before we dive into the charts and take a look at those chart patterns, that is our focus of today. Be aware of this disclaimer. It is explaining the fact that this video, first of all, of course, this live webinar, but later on video recording is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered higher risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, thank you so much for your attention. So, let's see, the slide does not seem to be moving, but I think it will anytime. We're going to take a look at charts, basically chart patterns. And first of all, what I do always when using technical analysis is looking at trends and momentum. What does the direction say? Then I look at basically patterns indeed, chart patterns, candlestick patterns, divergence patterns, wave patterns as well. Then I look at filters, support and resistance, seeing where there could be a bounce or break, or where there's maybe a higher level support and resistance that could block a trade. And step 4, basically looking at if the first 3 steps are green, have a green light and are good to go, at what spot do I want to trade it? Where is the most interesting spot that I think that price could reach? And what am I looking for? So where are bounce or break spots, basically? Where are those decision zones? And that I do by basically looking at the path of least resistance. What seems the most likely path for price, and where basically am I looking to enter, and what kind of trigger am I looking for? Okay, let's take a quick look at the market heat map. Market heat map you can find by going to admiralmarkets.com, clicking on analytics and clicking on heat map, and you can see some of the bigger movers. And of course, pound was one of those after Thursday's big move, or that was actually Friday already. Friday morning, big move. Pound was very volatile. Now it's just looking at the last 2 days, so that's a bit less. But you can still see pound, CAD here, big mover to the downside, also a lot of volatility. Euro CAD, same thing, a bit less volatile, a bit less movement, but still one of the biggest ones. Same for CAD yen, CAD Swiss, CAD being one of the biggest movers here yesterday. And you can take a look, currency ranges, you see how pound was up all the way here, but falling to a normal level again. That was really, of course, above and beyond. Pound going a bit back to normal levels. CAD, though, taking the first spot. Typically, it is the pound. CAD, a lot of movements for the CAD, and the rest is about average. All right. Let's also take a quick look at the calendar. Today we have, if I remember correctly, yes, the ZEW economic sentiment. There are also some other news, of course. Take a look at that. You can just find it very quickly by going to analytics and then click on Forex calendar. Tomorrow we got FOMC meeting minutes. We can dive into what the Fed is thinking about the next few months. Perhaps there will be an interest rate hike in December, but I don't think it's a done deal. I think that still remains to be seen. Obviously, I don't think that any big movement will happen with the U.S. elections around the corner now, 4 weeks to that point. Actually, exactly 4 weeks from today. And it seems like, according to the most recent exit polls, Clinton is taking a double-digit lead. So it seems to be that with 4 weeks left, that could, if that lead continues, that could be very difficult to change with such little time remaining. But let's see. That basically, in my opinion, would give a green light for the dollar, I think, to continue. Let's take a look at the charts right now. You see, with the Clinton presidency, I think we could expect some of the U.S. policies that we've seen over the last decades to continue. I don't expect that, for instance, there will be a huge, there might be an increase of deficit spending there, but not a huge increase, right? And with the Trump presidency, it's pretty unclear what the policies would be. He mentioned several things, but they're very contrary to each other. One time this, but then the opposite very soon after that. So who knows? Difficult to say. With Clinton, there's more stability in that regard. So I think for us traders, a Trump presidency would be a uncertainty. It's not even a risk factor because we don't know what. It's basically uncertainty because we cannot measure it, in my opinion. So from a trading perspective, I think that when you have a Clinton presidency, I think technically the things will take over again. This consolidation I expect to be completed, and I think we'll see a downtrend continuation of the euro dollar. We'll see this formation break, right? This one right here, this triangle, and we'll see price head towards parity, I would expect. And we'll see continuation of this momentum down. All right, so we had a super large triangle here, like this. All right, eventually here, we're saying the triangle is ending. We should see an impulse to the downside. That's exactly what happened. We had a rising wedge here, great momentum. That momentum is still dominant. This is a relatively small triangle for a monthly chart. Of course, if you're trading it daily, that seems pretty huge, right? We've been looking at it for about 1.5 years now. But I do think that this could be soon ending. I think that once Clinton gets chosen, I think that will not be a fear factor anymore. So I think there is a barrier gone. I think that if the Fed indeed increases the rate hike there, that could be the trigger actually pushing the euro dollar down. All right. So I'm curious what you think. Do you agree with this? Do you have the same vision here, or do you see it differently? Usually politics does not really get in the way all too much of our technical trading, but just wanted to, it's getting closer and closer. So an event like this obviously will have a shadow over what we can expect with trading too. I don't think that we'll see a break before the elections, but if the polls are really, really showing a strong potential for Clinton win, it might start. The downtrend might start already. I don't know. I'm not saying that it necessarily will, but it could. So do you agree with this, or do you see it differently? I'm curious to see what your opinion is. I wish I had a poll that I could ask you. But anyhow, let's dive into more day-to-day trading. From an hourly perspective, I think we're at a bouncing spot. You can see very, very corrective kind of piece here. Look at all these spikes up. Look at all these moves down. You can see that maybe a bit better on the 4-hour chart. Very choppy price action here. At this moment, let me get rid of this fib. Sorry, it's quite annoying actually. All right, there we go. Yes, exactly. That's what I'm expecting. If Clinton wins, I expect that it will not necessarily maybe create dollar strength immediately, but I think it will not stand in the way of dollar strength. I think technically and fundamentally, we should expect dollar strength. So I'm not sure if Clinton necessarily adds to that, but it doesn't stop it. It might add. I just want to be, it could be, but I think with pretty high confidence level, I can say that won't stop it. With the Trump presidency, I think that's the market see that as a pretty big question mark. I think it's a pretty big uncertainty. That might stop it, indeed, a dollar strength move. I don't know what could happen, actually. Only time will tell. I don't even want to speculate or make any forecasts because I have no clue, to be honest. So, from a euro dollar perspective, I think this is a potential bouncing spot. You can see already previous support levels here, right? Like this. So could it bounce again? It's bounced already so many times. Obviously, we see that the price is making lower highs and the resistance is kicking in sooner and sooner. So I do think this is a bearish structure, bearish formation. and I think that it will break to the downside eventually. The break here is not something I'm interested in trading. There are too many support levels, 110, 110.50. I would like to see it below 110 before I think it's really interesting to trade a breakout. Now, if you use my rule, chart patterns after chart patterns, today our focus is chart patterns. This is something we've talked about in previous webinars before, is that if you get a chart pattern like this, sometimes it's actually better to wait for a break, wait for a chart pattern on a lower time frame, and wait for that pattern to emerge, either trading that pattern or the break of that pattern, because basically then in that case, you know that the chance of a false breakout is extremely lower, all right, or at least lower. I don't want to overemphasize stuff, but I think it's a lot lower. When you get a bear flag after a break, this is obviously a huge, it could be a descending wedge, for instance, like this. So if you get a break of that, and you get a bear flag on a 15-minute chart or an hourly chart, then that means that this break is probably not going to run into a false break. Otherwise, there's always a chance, of course, of a push down, and then before you know it, still an ABC zigzag up. Well, look at this right here. That's a perfect example. That's exactly what happened with this one last week, in fact, right? That's the stuff you want to be careful of. So how could we avoid this kind of break? Is by waiting for a flag like this on the lower time frame. We didn't get that there. We had a break and a close and reverse immediately. So that's the warning. Okay. We didn't get a confirmation of the pattern. So we can expect that too here. Now, on my wave analysis, my wave patterns this morning, quickly, I'm expecting this to be the end of an A, and I think we can get a B and down for a C like this. Would I be willing to buy it here? Maybe. Not now. Price action is bearish. I would definitely want to see probably a little bit of a bounce on the lower time frame at the very minimum. I would probably like to see some impulse and a hook back, maybe like an inverted head and shoulders here. And then this weakness here could be interesting to trade for long. I would expect an ABC. More interestingly, probably would be the trading the end of this third move up, the end of this ABC pattern. And there should be divergence between A and C. There should be, we can put a fib on A from here basically. Let me show you like this. We can put a fib from here to here, or from here to, from there to, or from here to here. Both are okay. And wait for 50 fib and look for minus 272, minus 61.8 target. Here I would expect a turn. I would expect momentum to the downside right away, and I would expect the continuation lower. So which of these pieces are most interesting? Probably indeed here, and also the short here. Alternatively, if it doesn't pop up and make a head and shoulders, and it does break here, then as I said, I'm looking for a flag before trading it lower. So that is about it. I would use time factor to help my decision here. Like if I see a dip down and I see price on a 5-minute chart do like this, and then I see a move down like that, then this is probably the head, and here are the shoulders. Time factor, what I mean with that is that 5 to 6 candles not breaking this low on a 5-minute chart, and we see a 5-wave pattern up on a 5-minute chart, and we see an ABC down, then this is most likely going to prove to be a head and shoulders, inverted head and shoulders. If we then see 5 to 6 candles not breaking this low, then that's probably the start of a next rally. Alternatively, one caveat here, or one warning, is that if it starts to build a bear flag like this. All right, if it's on a 15-minute chart and it builds something like that, then I'm going to move it to break even, take the risk off the table. Any longs might still work out. It could just be a choppy beginning, but you want to be realistic and say, okay, if this is a bear flag, there is momentum prior to it. It could still be a wave 4, for instance, here, especially if price stays below. Let's say it ends right here. Okay, I don't know. It could end lower, so obviously I'll move it. Especially if price does like this and stays below the 23 or 38.5 2 and breaks, then that could be a bear flag. That's something that could happen. So we're talking about future patterns, as you can see, and that all has to do with the fact that this right here is not a spot I want to trade it. It is a bounce or break spot. We are at such a level. Why? As I said just already not so long ago, just looking at this, yes, we are at a spot where price has to make a decision, but I don't want to trade that decision right now. I want to wait for price to make a reaction, and I want to follow that. All right. In this case, I do, because the euro dollar is just very choppy. So that's my view. Now the pound basically is, let's take a quick look here, by the way, at the wave analysis of the pound, because it is a pattern webinar, first of all. And secondly, of course, pound is quite dramatic in how it moved. I think it could be just very quickly beneficial to take a look at that. So pound dollar 4-hour chart. Basically, I think that the strong push down here is most likely finishing some type of wave 3. I have it at light green at the moment. I had light green actually earlier, before the decline, and I had it as a wave 5 initially. But because of the strength of the decline, I changed that. And that has to do with the fact that typically wave 3 has the biggest momentum. So that's obvious now, right? We see the biggest momentum here. So I changed that. Now, did it really matter that at the time, a week ago? No, because at that time we were also talking about pound dollar downside, that it is breaking those bottoms, and we were talking already about shorts and etc. So maybe some of you caught those trades to the downside. That's great. Now at this moment, I think we're looking at a more difficult structure, because after such a big move, I think that typically you're going to see market consolidate, and you're going to see price basically make some kind of range like this. So I think we're going to see ups and downs like that. So if we zoom into the hourly to get a bit of picture about that, like this. Basically, I think we're looking at some complex correction that's going to start. And I would expect the price to, if price does break these trend lines, I don't think you see them yet. Let me refresh it. But if you see the break of those trend lines, then I would expect price to respect these fibs, right? Or at least some of them. I don't think the price is going to really push all too far. That's my point. So although the distances between these fibs are actually quite large because of that massive decline last week, these fibs are quite wide away from each other. So if we're talking about a break down to the 61.8 fib, it's still about 150 pips movement. So we'll definitely take a look at that. But ultimately, I would expect price to stay in this and make some ups and downs like that. So I don't think pound is that exciting necessarily this week. Maybe next week could be a bit better. Oh, sorry, I clicked on the wrong button here. All right, so looks like pound is again pushing lower. Hourly candle was bearish here. So it looks like we can see a follow through right now. Let's take a look at 50-minute chart. And 5-minute chart. I think it looks like an okay break. Obviously, pound breaks before London Open, or I don't know if that's obvious, but in my opinion, is not the best. I'd rather take it a bit later. We got good momentum to the downside of these lower time frames, and you see that basically all of these were corrections as well. So I would think that this could be equally so. But considering the fact the timing of the break right now as London opens, I think it's probably better to wait for some kind of a bit more of a correction, still a bit of a pattern, I would say here, probably on a 5-minute chart. Let's keep an eye on it on the 5-minute chart. I want to see how it reacts here. We'll go back to this in a second. Dollar yen seems like a good bounce at 38.25. Talked about it in yesterday's weekly video recap on Admiral Markets. You can find that very quickly by going to Analytics Technical Analysis, and you'll find Monday is always my take on the markets in a video somewhere in the morning, 9, 10 o'clock-ish, right here. But dollar yen was one of the ones I liked at the 38.50, not expecting to break below the 61.8. It did bounce at the 38.2 fib, but now seemingly not able to push above this resistance. So, well, it's if you're in that trade, I would just move it to break even. That's one thing. If you're anywhere around, entering here or at the 38 or at the break here, I think there's no reason to stay, keep the risk on the table. I think break-even is fine. I wouldn't take profit. I think that there's still a good chance that this is a retracement and a push to 105 is near. We still have, especially here, 103.50. There's a small little pause here. That could be a bounce right there. Is it something that I would want to trade? I don't know. Not really that interesting, I think. But it could be okay. Obviously, it's not as great as the 38.2 fib because there's a top in here, but it's okayish. It's I would probably want to see on a 5-minute chart some turn. To be honest, I think that this could be an ABC zigzag. So from that point of view, this could still be one more push like this. We could see maybe a bounce, a hook back, and then a continuation. And this was just a correction back to support, as you can see here. So from that point of view, I'm definitely open to it. It's just that I'd probably wait for, let's take a look at this 5-minute candle too. All right, so it's a good timing of this webinar by coincidence. I think that we can keep an eye on these 5-minute charts, I think, to see how price is behaving. An ABC zigzag to which direction, Hamad? Is that up or down? We had an ABC zigzag here, indeed, within a wave 4. And this could be the start of an uptrend. Alternatively, if price breaks below this point, then it could be that this is still part of a complex correction. In that case, I think that this could be a W, this could turn out to be an X, and we can go down to Y, and price could make a move down back to the bottom, after which we can get a bounce. Oh, okay, that's what Hamad was referring to. Okay, so Hamad beat me on that. This is Hamad's idea here, and basically this is not ending the wave 4, but there could be a complexion. Yeah, that's definitely possible. To me, this does not look like a great zigzag because of the short wave C, if that's the case. And but nothing's perfect, so it's definitely possible. Let's see how. That's why I don't want to buy it here. Let's say without some decent evidence or some decent confirmation, because of that risk as well, indeed. So yes, this is a potential support level. Is it solid as gold? No, I don't think so. And I think got to keep an eye on it and see if there's some reaction and how it reacts to see if we get a bigger correction or that uptrend continuation. I think the verdict still has to be, let's say, made. The conclusion still has to be drawn. I think we should be open to both, in my view. But we know what the important thing is. We know what we're looking for. We know what levels are and the key levels are. And let's keep an eye on how it reacts in here. All right, so great job. I think the Aussie is interesting, and the New Zealand is interesting. Aussie I already talked about yesterday, but we bounced off the minus 272 target. Yesterday I was saying that there could be a move down to that minus 61.8 target, the weekly S1 and the trend line. I think that could be a bouncing spot. I think a position bounce trade off 75 is something I'm very interested in. Now yesterday there was basically still a move down. I kind of ignored that in my video yesterday. I was looking for the bigger move from here up to here. Part of that is the fact that I just don't like trading it in the middle. I like when it gets to more decisive kind of spots. Then again, I think Nennet most likely would have been talking about a short in here, just because I think Nennet, I would assume that Nennet sees this as a downtrend. Me too. I agree with him, like this, and I think that he was looking for shorts here. Did anyone see the weekly recap yesterday? By any chance? I think he would have been looking at this. Did anyone see his recap yesterday? Monday, 6 p.m. So that would be my bet. I didn't see it myself, but so I think that if you watch Ned's recap, that he would have been probably looking for shorts here within this channel down to, I don't know exactly what target. He's maybe a bit more conservative on targets than I am, so I'm not sure what the target would be. But so that's great. Then you got his view on that for downside. Oh, he was looking at buying, yeah, 75.60, and selling 76.50. Okay, so 76.50 was not reached then in that case. It did get close, 76.25. So that was really close. It basically opened, yeah, during the day, made that spike. It did make that spike, but didn't get up that high, and started to move down. All right, I think I guess the buy is working pretty well at this moment. Small drawdown here, but ultimately we're seeing a bounce as we speak. I was personally looking for a buy a bit lower, as you can see, but I guess there could be a bounce still, and then one move down and a bounce like that. that could be possible too. So that's my take. I think that I would rather wait for this personally, this point, and I think that hopefully then this time it will break to the upside. I think that New Zealand is looking interesting, and we'll take a look at first the New Zealand. Now, finally did break. It was quite complex, and that complexity made me basically expect a bit more danger than it really turned out to be. I thought that price might make a bigger rally within this complex correction like this. Ultimately, it didn't, and basically what I was thinking was that it could turn out to be more of a correction like that before moving down, maybe even testing this top. It really didn't. All right, it broke here, but it really didn't test that far. Turned at the 61.8 fib. And ultimately, it's probably more of a structure like this, momentum, correction, and now it started to break and continue and etc. So anyone who didn't trade this piece, right, was probably looking for the break. So how would you do that with chart patterns? How could you have done that? Basically, candles are always great. So anyone seeing this candle, for instance, that's a great signal. That's a big candle. That's a big momentum bar. As Ned calls it, a master candle, right? He calls it. So master candle, that signals such a candle is a decent signal or a good signal that this correction is over. Now, if you're looking for a pattern, this is a pattern on maybe a 4-hour chart. You can even see it as a pattern on the hourly chart. So if you're looking for an example of the pattern after the pattern, then it depends on what time frame you're looking at. I don't think we had a great pattern here on the hourly, but let's take a look at the 15. Here you can see a small bear flag, for instance. That's a bit small, but still it is basically showing that the 4-hour candle close is holding, price is not moving against it too much. So break or the pattern itself, indicates a potential for continuation. The hourly chart, as I said, ultimately this could still be a pattern, I guess, as well, but kind of choppy. Let's get rid of this quickly. But in any case, we did have a break, a pullback, and now we're continuing. So at this moment, I think that New Zealand weakness is kicking in. pretty substantially here. There might be still a pullback, but I think that pullback is a rally to sell. And I'm just trying to see. Yeah, in my opinion, it's not really worth shorting right now, but I think it's too late for that. But there is, I think, generally speaking, Kiwi weakness, and I think if we see a correction like that up in here, that could be a better short. So generally speaking, Aussie moving lower, but definitely less than the Kiwi. So let's take a look at New Zealand. Okay, let me refresh this quickly. All right. So we see that the New Zealand definitely in a strong uptrend, pushing higher and higher, and on this time frame. Now, higher time frames we saw weakness. This could be, actually, we talked about it already before, this could be a huge turnaround here on the New Zealand. So that's why I was already addressing it, I think a week and 2 weeks ago or something like that. And that's why I want to review it again. Here we go. So let's take a look quickly at the higher time frames here. All right, so this looks like momentum up. This looks like a complex correction down all the way to the 88.6 fib. So if this is a 1, probably more likely an A, B, then we can expect a C that will at least challenge roughly this resistance zone, if not break that resistance zone. So I think we're looking at a decent chance of price moving up back to 113 at a minimum, maybe more. So when price was down at 102, that was a good 1,000 pip plus. Now that's a bit less, but I think that there could be, at this moment, we're running into resistance here. So I wouldn't be surprised to see an ABC down, maybe even to make a head and shoulders like this. This particular buy here, I think, is very interesting because I would put a stop loss below this level. So we're looking at, assuming that price, say, let's goes up to just a tad higher, let's say up to here. The 88.6 is 102.90, 103.40 could be the bouncing spot. Let's say 103.40 with a stop loss below this bottom. It is basically about 120 pip stop loss. But the target, let's say 112.50, is about 900 pips. So an 8-to-1 trade there, I think, if this is able to make an ABC zigzag. If it does run into resistance and turns here, it will probably make an A, go up for a B, make down a C, three-wave pattern. I could put a fib here and here to see where the targets are and see where the minus 61.8 target is. That's probably where the turning spot will be as well. So for New Zealand to make that retracement, that would indeed signal that Aussie is going to have some period of, that would mean that Aussie needs to make some correction first, and not in New Zealand. Aussie to the downside, New Zealand to the upside for this New Zealand. But then after that, Aussie should take off. So yeah, we'll have to see how those two relate. It might be a quick zigzag here. It doesn't even have to take that long. But yeah, this is a daily chart, so could take longer than, relatively take long, because if you're looking at lower time frames, that might seem relatively, of course, a bigger time frame. This is basically multiple divergences, kind of like a rising wedge. So I would expect a turn anytime soon. Small push up still, but then something like that, I think, seems likely. In this case, I don't think the 23.6 fib is important because I'm expecting a deep, either this is a wave 1 or A, probably 1. Waves 2 are typically deep. So in this case, price might stop at the 23.6 fib, but I don't expect much before it continues lower. And that has to do with the psychology of this particular structure. I would expect a deeper pullback. I wouldn't be even surprised if it goes as deep as a head and shoulders here. It's not a must. It could go to the 61.82, but 23.6 fib would be exceptional. And it could be if it's a zigzag, but yeah, it's possible, definitely possible, but it's not something I would. It's not the most likely scenario. If it makes a zigzag, then I think the 38.2 fib is more likely. In that case, it's also good to keep an eye on how it corrects. If it's fast, I would expect a continuation. If it's more of a choppy like this, right? Yeah, then the 38.2 fib seems more likely, indeed. And then it might just be a slow correction like that, and we might get the break like this. That's also possible. So it depends on this, this impulse. If there are 3 impulses, or how price makes maybe a slower move like this, then these higher fibs will be more important. Yeah, someone mentioned the S&P 500. Let's take a look at that. I think going really stuck in this sideways zone. Really not much to say besides it's a triangle that's running out of space. Probably it will just become a flat box like this. Let me add that quickly. Well, anyhow, you get the point. Probably pretty dependent on the election. It is the S&P 500. So I wouldn't be surprised. Maybe there's not much movement. Actually, I read a study. Yeah, definitely a flag. Absolutely. It's a flag. It's a triangle and a flag at the same time. It will probably break this triangle by going sideways. So I think the sideways green box is more important. I read a study that said that they were basically analyzing the polls from the U.S. election and comparing that to the movements made in the market, in the stock market, U.S. stock market, I think it was specifically. And as the Clinton basically polls went up, her favorite, her rating, her lead or went increased, the S&P 500 went up. If Trump actually gained on Clinton, then the S&P 500 was going down. So it seems like Wall Street is responding favorably to a Clinton lead, unfavorably to a Trump lead. This is not something that I did, but I read on a news website. I think it was CNBC. So I would not be surprised, but if it goes sideways. But yeah, I don't see any particular trade in this. I guess a breakout to the upside, but let's see. In this case, I think it's good probably to wait for a break and wait for a pattern after the break. Pattern after the pattern. All right, shallow wave 4 reaching the targets here, minus 272, minus 61.8. We're looking at gold now. And that seems to be completing waves 4 and 5 within a larger 4-hour swing. So I think that 4-hour swing has been finished probably, considering time factor. The oscillator is going back to the 0 line. So I think we can now increase the fib from here to here to put it on the entire swing high, swing low. Now that swing high, swing low, right? Let's dive a bit into, basically, let's take a look at the daily chart. To understand what this swing high is. And on the daily chart, this swing high is not finished yet. The swing, sorry. We need to take a look at this. We need to know what is this, basically, within this. All right, so let me zoom out to the weekly chart, or even monthly chart, really. And what we've seen, of course, was a grand rally here. We saw a correction. So is this part of a complex correction or a start of a new uptrend? And that is one of the main questions on this gold. For the moment, though, when looking at the weekly, we see a potential for 5 waves, simply put, which could be an A or a 1. If we take the conservative view and it's an A, then this could be a B, in which we would expect price to stop at the fib. So if we put a fib like this, all right, we would expect price to turn at these fib levels, right? So now considering this strong bar, I don't think the 38.2 fib is going to be vital. The reason is because strong momentum bars like that typically breaks support or resistance. So I think that if it does make this ABC zigzag, it will probably occur not at 38, but perhaps the 50, or maybe lower. So from that point of view, I think that there's still downside left. I think that this will be a retracement for one more push lower, at least to the 50 fib. And we'll see this correction push lower. At the 50 fib, of course, we'll have to see. There could be a bouncing spot. And depending on how it bounces, it could be de-bounce, right? The major kind of push off if it is an ABC. Or it could be still part of a complex correction and move lower to the 61.8. But the 50 is an interesting zone to look for a bounce. Cool. Hamat is also looking for 50. So we got confluence there. Great. So with that in mind, we can now zoom in to this daily. And we see that probably this is in a correction like this. And this was a complex correction here. So we're looking at probably an A, B, C. So this is in C. So most likely. So from that point of view, this is all part of C. Now, what could have been happening is that what we think is a complex correction like this, hang on. What we think is this was maybe a complex correction. Maybe the complex correction was like this, and this was actually a 1, 2, and this is a 3. And we're going up for 4, and we're going down for 5. That ends up here. So let's take a look at this part here. And it looks like a 5 wave. Yeah, so that could be 1. This is zigzag for 2. This is all 3. It looks like 3 has been finished right now. There were some waves 4 and 5s within this blue 3 on the hourly chart. That looks to be over. The wave 3 looks to be over. This looks like a wave 4. So price hit the 23.6 fib already, stopped at that. I think that will be just part of a correction that will take price eventually up to the 38.2 fib, after which I would expect a turn back down for that wave 5 towards the bigger 50 fib of purple here at 1210, where there's a minus 272 target as well. Got momentum riding behind it too. So that would make sense that this is a wave 3, looking at the awesome oscillator. So great. This is Hamat has the same view, so that's good. If you get confluence like that, that's always beneficial. If you don't, that's good too, because we challenge each other's ideas and we learn from that too. So both things are great. Is it possible, some quick question here, is it possible for him to win? Well, if you would have asked me a week, I would say it's definitely possible. It's still possible, but a week ago it seemed more realistic, considering the polls and the fact that the difference was so small. Now with the most recent polling, it really seems to be quite a substantial gap. Theoretically, it's possible. I think definitely less realistic. And the time is really diminishing quickly too, with 4 weeks to go. Let's take a look at some other pairs. We got some yen pairs we can take a look at. Maybe quickly DAX and dollar index, a question here. And your dollar question. Okay. A dollar CAD, yes. Dollar index pushing indeed. And yeah, that could be the break already. So, you know, the Aussie upside, my Aussie upside idea might be thwarted or stopped if the dollar index really starts to break like this. But in that case, the Aussie might be the one that moves the least compared to the euro and then pound and perhaps even Kiwi as we've seen. DAX. Where is it? Quickly, and then we'll take a look at those others that you mentioned. There it is, sorry. Let's see. Yeah, still in this pattern here. Bull flag pattern, 38.2 fib bounce. It would need to break above the bull flag to go up to the minus 272 target. It is a break. Basically, it's a pattern after the pattern. You might wonder what pattern. It's a weekly pattern. Weekly correction here. It broke above that weekly correction and is showing a mini pattern. So it's actually a pattern after the pattern. So if it breaks, could be a good continuation there. And then you can do the same trick again on a 4-hour chart. If it breaks the 4-hour trend line, right? It's breaking a pattern. Let's see on the 1-hour chart if we get a pattern after the pattern after the pattern. And it probably will. That would be personally, I think, the best to look for, from my view. Your dollar. Your dollar is still at the bottom. It is moving, indeed. Would not look much more like, it doesn't look really like a head and shoulders pattern anymore so much. But ultimately, I think it's more in a bouncing spot. I definitely wouldn't want to go short right in front of this. Shorts yesterday, you know, anywhere along this fall might have made sense because there's still space to that bottom. Now with the bottom near, I'm not interested. Once again, I will be looking for a break and a bear flag or completion of an ABC zigzag first. Yes, exactly. Dalish says that, you know, 111 needs to be broken. I agree. Not only do I need to see a break, I want to see a bear flag pattern after the break. So let's take a look at the others right now. The other pairs still, some yen pairs, a dollar CAD. First of all, a very quick message that if you want to trade with animal markets, Janet and I have been doing that already for more than a decade now, and we've only had good experiences. And, you know, execution, spread, and also, of course, as you probably found out, we got live webinars and analytics that you can find out. We got MT4 Trader, Supreme Edition, 100 extra features. There's Web Trader. Admiral Markets won Best MT4 Broker Award last year, 2015, won the Best Educator Award this year. So that's one thing. A lot of good stuff there. Secondly is that Nennet and I are offering a special deal. So we went really out of the box here and are offering about, well, what is it? I think 12 extra things besides the things that I just mentioned, from basically free courses, free indicators, our mentoring program, credit that you can use for Elite Currency website. That's the website that Nennet and I run, that you can use based on your volume, basically. All right, and we give extras depending on if you trade, you know, extra months in a row. So we get discounts. So there's a lot of stuff here. Now that's available for those that want to open an account with Admiral Markets, but do it through Nennet and myself. So take a look. You can see all these advantages here in this basically table. So if you're interested in that, just go to our website, click on Forex Learning here, and click on Free System and Tool. All right, then type in your name and email, and we'll send you more info. It's that's all you have to do. Just go to this link here. I'll send you the link right now. Another thing I wanted to let you know was basically that Zero to Hero is still right here, right? So just go to admiralmarkets.com, click on more info, sign up for free, right? Everything is for free. All these videos, 21-day course, you can still sign up right here with your name, email, and register. And the videos are to the point, 15 to 20 minutes. There are some options to follow up if you're interested in more in-depth material. We show you how you can do that, but if not, no problem. We have basically the most important things covered in these 21 sessions, but they're short, they're precise, and to the point. So I hope that you'll join. And there'll be a live webinar on the 31st where you have a Q&A. So yeah, some traders have already used that offer, and some traders have already joined before, and they've done good stuff with that. One trader used it to buy Nenet's system that he uses, AccuMM. That's a system that Nenet talked about in the blog with Admiral Markets in the past. And it's that system that he made in 1 month. He made 150% profit. So one trader was able to get it because of the credit that he made. So yeah, it does lead to good stuff. So think about it and let us know. So regarding the dollar CAD, let me use the template I've been using in others here quickly. So it looks like here too we'll see some dollar strength. Now ultimately the CAD here was pretty strong fall, so dollar CAD might be limited in its upside because of that. Yeah, but ultimately it will probably move up. It's just a bit choppy. Buying the dips is probably the best. Breakouts does not look good. I think that this could easily be a zigzag pattern. I'm just looking for 4-hour confirmation bar here. If this would print anything like a bullish bar like that, it might be worth it. I'm not sure if the dollar CAD is the best one though, to be honest. But it could retest these resistances up in here like this. I don't think I'm really a fan of this pair, to be honest. I will skip it for the moment. Euro yen. To me, Euro yen looks like in a zigzag. I mean, in a bigger triangle. I was already saying that this could move up to resistance. But ultimately, I think it will not break this fib. So I could still push up to the 78.6 fib. Now it's stopped at the 61.8. I think otherwise it will still stay within this range for a while. But if the dollar yen really starts to push up, then the euro yen might move up with it too. It depends how much the euro dollar falls at the same time. It could be quite rangy actually, this pair. Same for the pound yen, I think. Also making a range right here. Does not look that great. Let's quickly look at the euro odd. Greg is saying that he thinks that Brexit is a disaster in the making for Britain and just like a bad FX trade gone bad. And yeah, sadly, I'm scared that that could be so. Now, with the pound, of course, weakness kicking in play, it could revive the British economy as well. So that's the advantage when the pound does weaken. At least it has the monetary kind of the exchange ability to adapt to that. If you compare that to what is happening with the Eurozone, weaker performing countries, Greece, Portugal, don't have that opportunity to gain a competitive advantage through a weakening currency. So although I think the strategic decision made in the Brexit vote to leave signals less, I think, potential for Great Britain, in my view, as a political view, I do think that the fact that they have their own currency makes them more adapt to that change. So I think that they will go through some downside because of that, but they also have then the potential to recover because of the weakening currency. Greece and Portugal didn't have that. So actually there's a new book out called The Euro and its Threat to the Future of Europe from Joseph E. Stiglitz. Did anyone hear about this book? I think it was very recent, released. Definitely this year, but I think really we're talking about, I think just within the last few months, maybe even a few weeks. And I'm reading it right now, about halfway. And he that's exactly his point that I just said, actually. That's why I'm referring to it, is that there is no ability for these countries really to make this rebound if they're forced to keep keep spending low. The country is going to have really struggles to get out of a depressive economic environment if it cannot basically outgrow its economic problems. That's his main point, or so far. So that's basically the advantage of Great Britain. Thoughts of the FTSE? Yeah, well, they've definitely take a look at that. And Hamad is joking around and saying the dollar cat is a lazy horse, and it definitely is. It's definitely a choppy horse. That's at least the case. Could take a look at the other cat pairs because they did move quite substantially. I think that pound odd looks good for a break right now here. I wouldn't expect a lower low necessarily, but it does look good, like a good break. I think a 4-hour candle engulfing the previous bullish candle like this could be a good continuation signal. A bit of a pullback maybe, perhaps, and I would expect price to continue lower. How much lower? I think a modest target could be this 272 target, 160.40. 160 is the round level. I think that's a modest target there. That looks interesting to me. Euro odd doesn't. Pound New Zealand doesn't. Euro New Zealand. Euro New Zealand might be completing its zigzag, but it still has some space left. 158. So there's a strong bullish candle. So I don't think that's finished yet. There could be just a small push up here, but then I would expect the zigzag to complete there at this moment. So 158 could be a key level for bearish turnaround. Of course, if price builds a bull flag at that target, then it will probably make one more leg up. If it starts to show momentum here, if it makes one more push, there's divergence and starts to fall like this, and then starts to do this, I think we should see downside. FTSE. Still at that top. Still hasn't broken the top. And yeah, I don't really have much to say yet. Last week I was saying I need to see a break above the top before I think there's anything to do. This is the 5th day. I guess if it doesn't break within today or tomorrow, there could be a bigger consolidation here. If today or tomorrow has a daily candle breaking above it like that, with the close near the high, could be a breakout to the upside. Now I don't trade FTSE, so I don't have any particular trade ideas. I'm just, if anything, I would be monitoring this daily chart and looking for a daily close today or tomorrow with above this pink line with a daily close near the high. If it doesn't, then there's a chance it just turns into some correction. Just a quick look at some CADs here because the CAD was moving a lot on the what's it called again? The one second. The heat map. Not sure why. All right. So, any questions? Anything that you already had a lot of questions? That's great. Anything else? We can take a look at those 5-minute charts, as I said at the beginning. Forgot about those. Let's take a look. Do you check 1 minute? What do you mean, Dogan, with if I check 1 minute? Or if I look at 1 minute charts, you mean? Crude oil, that's a good one. Well, only when scalping. So occasionally I do that. Throughout the summer I was more scalping, but not so much in September because I was taking some days off and I was doing the extra project for the Hero to Zero, so I didn't have much time for that. But in July and August, yes. Let's see. Crude oil is a good idea. Correct. The deposits are only for those that have an account or open account with Admiral Markets through us. So if you already have an account with Admiral Markets, then you can still sign up with us through the sheet that I just mentioned. And I don't know, maybe we can make an agreement. I don't know yet actually because we didn't have it. We didn't have such a case yet. But if but we can check it out for you. Let's see if we can do, get some, work something out. But I don't know. That's the only thing. So I cannot say on that. But try it. Yeah. Well, let's see. We can try to figure it out. I'll ask some people and see what they say. Let's see. Okay. But the best is if you can, or if you could write me an email maybe, or sign up. Then I have a reminder of that. Okay, great, perfect. So general market sentiment. Yeah, we'll do a recap indeed. We'll do a recap. We'll take a look at crude oil. Ed is asking if the U.S. is heading for recession, and well, that's an interesting question. It's a totally different environment, isn't it? You would expect. The thing is that the rebound after the Great Recession, has been slow in the U.S. In Europe, there has been no rebound. It's been basically stagnating for almost a decade, meaning that basically the Eurozone has lost a decade. That the drawdown, let's say, right, the bearish pressure has been so long that even if it recovers, it will not get to the place that it would have been without that Great Recession. Now, Mr. Stiglitz, in the book I just mentioned about the euro, explains that this is due to the lack of proper structure of the Eurozone. And he goes into that in very big depth, that this is, yes, the Great Recession was triggered in the US, but the reason why it's lasting so long in the Eurozone is because of the rules that were made for the Eurozone. And they were basically inadequate for at least parts, for the entire Eurozone, and specifically for parts of the Eurozone members. So now the US is recovering a bit, but inflation is not going with it as you would expect with a normal recovery, let's say, that at least what we've seen in the last 30, 50 years. Interest rates are still very low as well, relatively to normal recovery. So is there something structurally changing? Is the path still forward? Is the economy still going to continue? Or is this just like nearing its completion and we're going to see a new downturn? Is the question Ed is asking. And that's a great question. I honestly don't know. I think that probably the U.S. economy is still strong enough to push somewhat forward. But I do think that considering the last 10 years, something structurally has changed as well. And I don't think we're going to see interest rates in the U.S. Move to the levels we saw prior to the Great Recession. And it also has to do with the fact that it looks like unemployment levels are just not rising to the levels that we had prior to the Great Recession. If you want to keep your economy moving forward, the primary method in our current economy is employment. Employment is the main benefit, main income source. Employment is the way people earn money, and that's how they spend it on. That's what they base their decisions on. That's how we get consumer expenditures, right? Consumer expenditures and government spending. Government spending is tough. Many of the Western governments have hit their pretty high levels of debt. Consumer spending is being hit because those unemployment levels are still very low in a lot of parts of, very high, in Europe. And the U.S. is down to 5%, but that's still not the same kind of level that we had prior to the Great Recession. So although I think that we could see some upside still in the U.S., the overall environment is not really supporting, I think, a huge bullish move. I think we could see some choppy upside still, but eventually we might hit some resistance and we might see some correction again to the downside, even in the U.S. But the timing is difficult. Now, the reason why the structural unemployment is higher is a good question. Now, Stiglitz is saying the Eurozone rules for the euro are not helping it, right? And he's blaming that. And he has some good, read the book himself. He's got a good arguments there, obviously. And I'm sure there'll be counter arguments maybe from someone, but to me, when I was reading it, there are some very good arguments, I think. But the U.S. doesn't have that, right? That particular argument. So I also read another book that gave a very good, compelling argument, was that basically the age of robotics and automation are making things so cheap to replace labor that companies are more able to replace labor with machines, and that it will only be more and more so in the future. So structurally, the unemployment could be creeping up because of that. And that author had very good arguments as well. So those are two explanations why we might be going into different economic times than we saw between the 60s and before the Great Recession. All right. Impact of pound on the FTSE. I think it could be because of the weak pound indeed. Can we make a webinar for scalping 1-minute charts? Yeah, let me write that down actually. All right. Just have to think when, because we have our schedule full to the end of the year, but maybe we can do it, let's see, maybe next week, otherwise the week after that on this Wednesday. So let's see, either next week or the week after. Yeah, no problem. Absolutely no problem. Let's see. And Craig is saying, yeah, Craig, good argument here. Of course, a lot of people say that those arguments were made in the past about automation and robotics taking over jobs, and it didn't happen, right? And that's a strong argument, and it's been valid for 50 years actually. And in fact, it was so strong that anyone hinting to robotics or automation and saying that that is a threat for employment was more or less ridiculed almost to a certain point. Now that argument is coming a bit back. The argument that automation and employment is a danger. So it's not as ridiculous, let's say, anymore as it maybe was, who knows, 5, 10, 15 years ago. And the reason why it's not ridiculed anymore as much and gaining some track there is the fact that the environment is changing. In the 60s, it was a different environment where there were still a lot of jobs to be created from technology. But at this moment, you see that the environment is significantly changing and different. The speed of technology is growing a lot faster, and the cost is going down, and the task that they can do is a lot wider. The potential output of a company that is run by 10 or 100 people is so much larger nowadays than what you can imagine from 5, 10 years ago with a company that did that maybe with 10 or 100,000 people. Yes, there will be people needed to make those robots and operate them, but those are just a few jobs. As I said, people with, a company with 10 or 100 could do tremendous output that was impossible in the past. So now I'm not saying that all robots and all automation will replace unemployment. I didn't say that. I just said that structurally we're seeing it increase. And this author is explaining that automation could be one of those factors. All right, I think that's a conservative theory. Personally, we are experiencing that. We are seeing those stats go up. There could be other reasons. I think it's fair to say that robotics and automation are part of that. Now, if you want to take it more aggressively, then you could say that in the next 15 to 20 years, a lot of jobs could be in danger. And I read a Citibank report on that from a bank, again, Citibank, that said the same conclusion. There are a lot of jobs under threat, and the number of new jobs are not really lining up that much as in the past. But this is, of course, something that I would encourage you to read yourself. I would say read the book yourself. It's called The Rise of the Robots from Martin Ford. I only tell you the shortest version possible. It's a 300-page book. I'm giving you kind of like a 1-minute summary. So I would highly encourage you to read that book. if there's any book I would encourage you to read, it's this one, Rise of the Robots. Read it yourself, go through the arguments, and see for yourself if what you agree with, what you don't agree with, and you'll get your own conclusion from that. I would definitely encourage you to. This is, the best way for you, I think, for anyone to get their opinion. Let's see. What we were talking about, the FTSE, yeah, so I've lost my track here. I think that's, we were just going to, oh yeah, crude oil. So yeah, I understand like skepticism from anyone who says, yeah, we've heard that, we're already 50 years. I understand that. But, patterns change, things sometimes accelerate, things develop. So I think it's good to be still open for new developments and trends that could change that equation. And I think that if you look at, that the arguments made in that book, I think it's not a far stretch to say that there is a role or at least an impact there. Whether it's the main impact depends how much you agree with those arguments made, etc. All right, oil is finally pushing indeed above this resistance trend line, and we're seeing momentum. ABC correction, continuation here. So looks like we're headed towards at least an ABC correction. Talked about this one, and it seems to be happening. So now it's right at resistance here. But then generally speaking, 50 fib up to minus 272 target. What I would like to see is probably price break above this top, make a hook back to it, go up to the 272 target. If we see a bull flag, there's probably one more space up to the minus 61.8 target, after which if we see momentum, we could see a downside. Something like this would not surprise me. Like this. So the best spaces were, from my perspective, upon the break, or if it breaks the top and then makes a correction, bull flag, and then the next break. Right here, it doesn't seem to be the best spot. All right, so recap. Oil in a breakout, looking for basically the break at the top and a small little flag on the 4-hour chart for continuation higher. I think that Dow Jones and S&P 500 are in a consolidation. FTSE is challenging the top. DAX is in the bull flag. Gold is making a wave 4 and wave 5 out of C, looking for a bounce at the 50 fib to the upside, I think. And otherwise, currencies, I still think that Eurodollar is in a bouncing spot, but if it breaks through 111 and makes a bear flag, it could be in a breakout. If it doesn't, if it makes upside like this and then a correction like that, it could be more of a bouncing spot. I think that the dollar yen was in the bouncing spot and kind of didn't keep an eye on this one. 1, 2, 3, 4, 5, 6 candles here. That's what I was waiting for, 5 to 6 candles to show that this correction is over. And my favorite method is then to put a fib once that happens, and you got a 50 fib bounce. So that looked, if anyone caught that, that was a good buy. And let's see what happens here. I think moving to break even makes sense because there could be weakness here. That's my cat who doesn't agree that there could be weakness. She's fan of the dollar yen going up, but let's see how it responds here. If it doesn't break higher above this top, it could still be that bigger correction. So we have to see how price responds to this top here. But ultimately, I think this is a pretty good 1 hour candle. So as long as it stays above this trend line like this, I think it's still possible just for wave 5 continuation here. If it breaks that, then there's probably a bigger correction like this. Also, by the way, if it breaks this top, right, breaks the top and makes a bull flag, that could be set up for upside continuation. Kiwi, I need to see a retracement here, personally. I like the pound odd. If there's a good 4 hour candle engulfing the previous bullish candle. I think that's maybe the most interesting at this moment. The dollar yen upside, pound odd downside, dollar yen upside, and yeah, maybe the euro dollar upside and later on downside. Otherwise, Aussie perhaps at this bouncing spot, and the odd New Zealand upside I found interesting. That's about it, I guess. Thank you. Greg says, great webinar, and always learns from Neneth and myself. Thank you so much. Really appreciate those words and comments. Great stuff. Yeah, I guess that wraps it up indeed. So let me just show you one last thing. More webinars, just in case you're looking at the recording. For those that look at the recording later on, maybe. If you want to check out more webinars, admiralmarkets.com, and then click on education, then click on Forex CFD webinars, and you can sign up right here for these with Ned and myself. We're going to take a look at patterns, by the way. That's why I'm talking about patterns so much, by the way, because chart patterns today, wave patterns tomorrow, because actually we got a 2-week series on patterns, advanced and beginning patterns. That's why, Dogan, I was not sure if next week is the best moment. Maybe I'll do it 2 weeks from now because of this 2 kind of part series. And I wanted to make it like 2 weeks of focusing on patterns. So please sign up for that. We're going to take a look. It's 2 parts. We're going to look at more simpler patterns, let's say, more advanced patterns. I'm a big pattern fan. Nana likes patterns, so I think that we're going to have a good time there. So hope to see you in those. Nana has Haikanashi, by the way, with Ichimoku tomorrow, and tomorrow we have strategy. So hope to see you then. Thanks for being here. Thanks for all those comments. Great stuff. And wish you all great trading. Cheers.